Welcome to our weekly forecast. My name is Jay Norris. I teach the art of trading at Trading University. First market we'll take a look at will be the Australian US dollar. There's Aussie USD. You can see the broad range this guy's been in for upwards of a year. That top border there, the red line resistance, essentially that's you take the that comes from taking the 2015 high down to the 2016 low, draw a two-third retracement of that, and there you have it. That's our resistance level, and you can see how the market's respected that now for some time. Keep it simple. I think there's not so much upside anymore. I think you have a limited upside. Definitely market sentiment is still very bullish for long dollar positions. Generally, when we see markets sentiment, bullish market sentiment for the dollar, that's the time we want to be in the foreign currencies. That's the time when we want to be in markets like along the Aussie, along the Euro. But that tends to come to an end too. So you can see based on that resistance, we see a somewhat limited upside here. At the very least, if you were going to break through that resistance, you'd need to get a couple of weekly closes above it. You'd need some long-term closes above that level. So we're still in the buy the dip camp short term. Speaking of short term, let me go to a 4-hour chart where you'll be able to see those short-term patterns. We can get rid of that resistance. The market closed above that a couple times, and that swung us around to the long side. There you can see shorter term the patterns are still aligned on the long side. It'll be interesting to see what happens when price starts getting up above 77.5 on the approach to 78 even. Next market we'll take a look at dollar Swiss. Dollar Swiss coming up on support. We're still in sell the rally short term as far as those shorter term patterns. As far as day trading, however, you're coming up on pretty good support there. Once again, you're still seeing strong bullish dollar sentiment. Dollar sentiment very bullish out there. And again, short term will fade that, but long term we think that is correct. You know, we'll often fade the sentiment short term, but you have to be a little bit more careful long term. We feel and our own risk tolerance threshold theory tells us this, that the majority of people are right about the markets, contrary to what a lot of people think. It's true the majority of people are right about the markets. The reason they lose is they get greedy, they trade too big, and then they're just too impatient. So we're big believers that long-term sentiment is correct in being dollar bullish, but you get in too soon, and then you try to fight those corrections, and then you're not patient enough, and that's a recipe for losing. So we think this market's very close to seeing a lot of dollar bulls capitulate. You've seen a pretty good retracement of the U.S. presidential election rally, which looked to be a breakout, but now that's fading back. So definitely this is a level worth watching here, just above 98 the figure. So 98 the figure, kind of line in the sand there. And what we like seeing is you're seeing a confluence of support for the dollar pairs, resistance for the currencies across the board throughout the landscape, and you'll see those as we're covering these market for market. And that's what we like to see. We like to see support resistance converging. You recall last time we were together, you didn't quite have that. You had resistance in the Aussie, but when you got a couple of closes above that resistance, that pretty much shifted things. But what you didn't have resistance in the other markets, and the euro continued to climb higher. Likewise, the Swiss franc continued to climb higher. Or in this chart, you see the dollar Swiss that continued to work its way lower. So we're at a point where you continue to see strong dollar sentiment. Short term will fade that. Long term we'll eventually probably buy into that, but you know it's really going to depend on what the market tells us to do. So we'll see if our support levels hold. Have a pretty good track record of seeing that happen though. Next market we'll take a look at will be the dollar index itself. There it is. There, that's what I'm talking about. Seeing support, seeing the markets converging. You want to trade when markets are converging, and we think that's what's happening right now. Very similar pattern here. Of course, it's dollar index versus the dollar Swiss, and you can see that the market's been correcting, been working its way lower. These markets, we would definitely categorize them, the market movement, certainly the driver behind them is political. We think that you're going to get back to seeing economically driven markets. By the way, you had a pretty good U.S. employment number on Friday, but so much of this nonsense coming out from an inexperienced White House getting in the way, kind of muddying the water. But not to mention, back on the economic side too, you have a seasonal slowdown for the U.S. economy right now too. December, January, February, even into March, not known for good numbers, good growth, and you'll probably see that again, a relatively modern seasonal to it, but you're going to see that. But they have been politically driven, and you could see that the market's working its way lower. Definitely corrective behavior, and you're getting away with dollar weakness kind of under the cover of just ineptitude on behalf of the new U.S. president and his staff. But we think that you'll get past that, and markets will get back to being driven by the underlying fundamentals, and there's really no better underlying fundamental than the U.S. economy when that kicks in, when you see that early spring pickup, and we're confident you'll see that again. So we're bullish long term on the dollar still for sure, but we're not shy about playing both sides. You got to be a trader, and let's face it, trading both sides of the market. And we learned this last year too in the euro, which we'll get to. Pretty profitable. Not a bad idea to be on both sides, to trade both sides, and that's where we're at now. So still working the dollar index from the short side, short term, but we're looking at that support and a confluence of support across the gamut here, across all these markets. Next market, the euro itself. There we go. And again, short term, like it on the upside, but somewhat limited. Well, I guess you have some room there. You know where you're at right now. You've actually retraced 50% of this Trump sell-off, the U.S. presidential sell-off there. Here's the U.S. election itself, and you had the big sell-off in there. You've retraced about 50% of that already. So the going may get a little slower here, maybe a tougher slog taking euro higher from here. No doubt about it that bullish sentiment at an all-time high, and generally that's what we like to see if we're short-term buying the euro. We don't mind fading again that sentiment short-term, but long-term we think that will be correct. And again, most speculators, they're right overall, but they're just greedy and their timing is off. And we think that's going to be the case once again, where once you see a lot of the speculators that had gotten short on the way down, once they capitulate and they exit those trades, then that'll be the time to go in the euro. So we like the euro. You're getting in that zone, what we call a sell zone there. Anytime you get above 50% of a good down move like that, a good impulse move, you got to start looking at fading that, going the other way. In this case, going short overall. So definitely an area to watch on the chart for us. This band of potential resistance, between 108 and 110, really. Definitely still interested in setting up long-term shorts the closer you get to that 110 level. Next market, gold. Gold has been a laggard here, and you really see it. You haven't been able to give yourself a 50% retracement of that down move overall. So you got to be somewhat disappointed in the move of gold overall. What can you say? I think when you do see a resumption of dollar strength, that gold, having been a laggard on the way up, will really get punished for that too. Yen too, I think, is another one. Speaking of the yen, next market, taking a look at it. Dollar yen, very shallow retracement that speaks to dollar strength overall. Here, that purple line's your 50% support. So while here your euro already has retraced 50%, your Aussie retraced more than 2/3. Yen, very shallow retracement. Dollar yen, very shallow retracement. Yen pretty weak. So again, when the dollar rally resumes, you probably want to be positioned short yen here, long dollar yen, short euro overall. Kind of leery about going after that Aussie, only because it's been so strong. And that'll do it for us. Again, my name is Jay Norris. I teach the art of trading at Trading University. Thank you so much, and we'll see you next time.